We have two assets in 29 metal. I'll speak about the Quebec one for sure. I want you to come to our booth. In 8 minutes, I cannot really cover everything that we need to talk about. I want you to remember we're copper, we're gold, we're in safe jurisdiction, and we're finance. Two assets, one in Quebec, one in Pickle Lake. And like I said, there is scale. I mean, both of them can grow. There is good grade. I mean, at Opemiska, we've got probably one of the highest grade open pit mine, copper mine in North America. And we have the infrastructure. We're in community that wants us to build mines. Now, in terms of grade, this graph here shows the grade at Opemiska. The leftmost column is the first 6 years, almost 1% copper equivalent. The second column is our life of mine, 17 years at 0.7% copper equivalent compared with the peers. However, this is the market. This is the capex to start the Opemiska mine, net less than $500 million. And this is because of geology, geography. We have the high-grade zone that, the old-timer were mining at Opemiska that come right up to surface. There's anywhere between 0 and 8 meters of overburden on top of the ore body. And basically, all the infrastructures are in place. In June last year, we put out the MRE for the Opemiska project, 150 million ton at 0.7% equivalent. That is made of two types of mineralization. The high-grade shoots, this is what the old-timer were mining, between 54 and 91 in the previous century. And then what I would call the stockwork that surround those high-grade zones, but still, 0.42% copper equivalent at 450 copper, that's $42 rock. And this is ore. You can see the airport, the road goes right up onto over the ore body. I mean, the hydro line is so close that, we're going to have to move the substation. We did a PEA in October at $3,000 gold and $435 copper. This is the center column there. $500 million NPV 8, 27% rate of return. And the payback, and this is very important, the payback is about 2 years. And if we use, I would say a bit more market value, like $475 copper and $4,300 gold, we're at 1.7 year payback. And in today's market, would probably pay back the mine in 5 quarters or less. And the reason for this is the fact that we've got high grade right up at the beginning. The first 6 years of mining, we have over 1% copper equivalent grade. And, because we haven't sold the copper in terms of streaming or whatever, net cash cost is $1 a pound for 6 years. And over the life of mine of 17 years, it's still $1.40. And this is first quartile cost of production. I mean, in today's market, this is very good mining cost. Strip ratio overall is 3.7 to 1, but when we start at surface, the strip ratio is almost less than 1, and it increased along the life of the mine. This is the capex and the cost structure. I'm not going to read this to you today. Come to the table and we can discuss it. I mean, the important thing there is capex is less than $500 million after the federal government tax credit. There is plenty of growth still at Opemiska. First of all, our pit has kind of a H-shaped form, and the two pits really are touching at the hip. We call it the saddle zone. We haven't yet finished, investigating the saddle zone, and just for the sake of showing, if you have the open pit, it's like having a little bit of a hill in the middle of the pit there. And we need to drill this year, and it's very high, I would say high value ore, that we could free up, once we get the model going. We also, in the PEA, we're sending to the mill only 50% of the resources. It's 80 million ton to the mill at 0.7, same grade. We're not high grading the resource for that. And basically there is plenty of ore left after 17 years. Finally, there is a third historical mine next to our proposed pit. It's called the Cook project. When Falconbridge was mining over there in the previous century, Cook was a gold mine. 80% of the revenue was gold, 20% copper. We're having a crack at drilling the crown pillar since November, and the first 2 holes we drilled in November, we had visible gold in it. So we brought in a second drill. We've been drilling over there since November. We're still drilling. We put a press release out this morning. Again, we can discuss it at the table, but we're seeing 2 zones, and we can trace them for 700 meter of strike length, and we already have the money to go back there and drill on a much tighter drill pattern. It's nuggety. We got very high grade and low grade in between, but the idea is, can we make another open pit there and bring it into the what I would call the enhanced or greater OPMISCA project. This is what keeps me up at night, valuation. I mean, there's something wrong here, and my job is to move the company to the right-hand side of the slide there. We're really trading at about 9% of the NAV of OPMISCA, and I haven't talked to you about the next project. Comparable guys, are 4 to 5 times better than us, and I have an update of that slide, and it's even worse at today's market. 3 minutes to talk about Thierry, the best kept secret in Ontario. This is the largest primary copper deposit in Ontario. It is still a brownfield. It was a mine between 76 and 82. There's 2 zones over there of interest. The K2 zone, which is the former underground mine and could be restarted by pumping the water and building a mill on top of it. But there's a K1 zone, and this is what interests us. Appears like low grade, 53 million ton at 0.38, but look at this. It is an outcrop that is 1.4 kilometer long. It dips at 55 degrees. It has a thickness of anywhere between 100 and 300 meter, in true thickness. And basically, we look at 210,000 meter of historical drill hole, recompile everything, and what the geologists found is that there is a gradient of increasing grade with depth. This thing is begging for more drilling. And the 53 million ton that was part of the resource statement in 2011 done by previous owner is in the dark shade part of the figure here. But the miner at the table would tell you that you mine this thing from the hanging wall to the footwall. This is the underground mine. Again, we can discuss it at the table, but it was totally developed with shaft to 1,000 feet, 1,600 feet actually. They left behind the equivalent today of $200 million of underground development. We did some IP over the project last fall, and this thing is lighting up. You can see the K1 zone in the middle. This is the outcrop I'm talking about, and K2 where the former mine was. This thing is on a mineralized trend that, again, begs for more drilling. In terms of, we're part of the OR group, but in terms of what I would call the catalyst coming up, there's plenty of result from drilling at Cook that will come in the next few months. We have one press release this morning. That's the first of a series. And then later this year, we're going to drill at Thierry, and there'll be a lot of press release coming up. Meanwhile, we're preparing OPMISCA for a PFS later next year. Thank you very much.